Balanco joins us on the show right now. Laurence, hi, morning. Thanks for joining in, and sorry to rush you out of your meeting, from what I
No
understand.
problem.
But what's the take on India right now? We seem to be in ship shape, even though the FI fraternity continues to elude Indian markets, and they've been sellers for all through this year so far. But we've done pretty well.
Yeah, it's more of a holding pattern. If you look at the Nifty in local currency terms, we've been above and below that 50-day moving average since mid-January. No real sustainable momentum on the upside. So it's what looks like more of a rolling correction. You've seen some rotation through the sectors. And then the other thing that we've seen most recently in Asia is this breakout in the China market. So you can see from an foreign flows perspective, that rebound in China is detracting from some of the investment in India. I don't think it changes the longer term trends, but we are in one of those holding patterns similar to the fourth quarter of 2023.
Indian markets are perhaps the only large market which are at a record high. All the other markets may be at record YTD high, but Indian markets across the board, whether small cap, mid cap or large cap, they're at a record high. New life high. What does that mean?
Well, again, it's all about the momentum measurements that we look at. And in January, we had high momentum. We've had some volatility. You've retested those highs, as you say, most recently. But the momentum indicators haven't confirmed those highs. And for us, when we typically get those slowing upside momentums, what we tend to see is the markets holding trading ranges. And that then sets a platform ultimately for a break to the upside. But what we take away from the slowing momentum, across the boards from small caps, mid caps to the larger cap indices, that we continue to see more of this choppy ranging action, even though you've made marginal new highs through the month of April.
Laurence, would you say that we have perhaps topped out, or at least near the top for the year as far as Nifty is concerned? Because you did hint about the consolidation that you're expecting.
Yes, I think this trading range sets up for a continuation of the longer term trend. So, no, I don't think we've seen the half of the year. But if we're looking at for the remainder of this quarter, I do think we'll remain in this choppy price action and basically see price swings of 5 to 8% in the range that we've seen so far. And then that will set up for a breakout to new all-time highs on a more sustained basis than the choppy moves that we've seen so far.
Laurence, if I could put it into numbers, are you saying that 22,775, which was the previous top on the Nifty, is that the best case for the year? Or do you think after some amount of consolidation, we could make a dash for a level higher than that? What's your outlook for the year?
The trading range and the volatility that we've seen, year to date, we think that sets a platform for a breakout and new highs for the market. But we've really got to digest the gains, consolidate in the range, and you've seen the sector rotation. You've got the metals and miners breaking out now. You've got autos slowing to the upside. You've obviously had the big breakdown in the RT side. So that's the sort of rotation that you've seen beneath the surface, and that's why we haven't seen a sustained move to the upside with the lack of that sort of full participation and the corrective action we've seen in the RT sector in particular, and most recently the pharma sector's rolled over too.
What would be the best approach to approach a market like India when you are pitted against a major market moving event like elections? What are you telling your clients?
Yeah, look, for us, the elections are sort of an event within this longer term uptrend. So, our view on the technical setup is to sort of pick your levels on this trading range setup, slowly accumulate. We still like the banking sector as the longer term leadership sector within the market, and would continue to accumulate for an ultimate breakout of the current trading range that we've seen in the market. So I don't think that alters the structure and the longer term trends that we've seen. And we do expect the continuation of those. It's just about sort of being patient through this consolidation process.
Laurence, in particular, what I want to talk about is the Nifty Bank and the banking constituents from the large cap banking pack, because, that, of course, has a big bearing on the way the index as well is going to move and the rest of the market mood as well. We've seen negative news flow come in for Kotak Bank with the regulator slapping a ban on them. ICICI Bank, decent set of earnings there. HDFC Bank has been much of an outperformer. And, Axis has had some some earnings, propeller behind it, and that sort of moved up higher. How do you see some of these banking stocks move going forward? And would you say that there's going to be stark leadership with ICICI Bank and Axis on one hand and the rest of them lagging on the other?
Well, it's quite interesting. If you look at the PSU banks, for example, that's been the big relative group leading the broader banks index since the 2020 lows. And we think from a longer term perspective that PSU banks will continue that re-rating. If you look at it, they've barely retraced half of their de-rating that they've seen from the highs, the relative highs that is, that they made back in 2013. So State Bank of India is still, a key longer term breakout candidate, which is currently in a holding pattern, but we think does trade higher. And then on the private sector bank side, I do think ICICI is sort of best positioned the way that its trends traced out. And then Axis Bank's recovery that you've seen over the past week does set it for a continuation of the breakout. And then you've got Kotak and HDFC, which over the past 2.5 years have been trapped in these very broad trading ranges. For HDFC, quite interestingly, we see that trading back towards the top of that range, towards the 1700, where Kotak remains in the lower half of its trading range. So again, we really reiterate this point about the sort of dispersion of performance and being more selective down to the stock level.
How much more for IT stocks to consolidate before their corrective phase is over?
I don't even think we've seen the slowing downside momentum from their recent breakdown. So it's not as if we've seen them starting to base out or showing slowing downside momentum. So I still think, we're at least a quarter away from seeing any kind of basing process or slowing downside momentum to suggest that you have a cover short bottom fishing bar setup.
Okay, except the bottom perhaps in a quarter, not the best time to bottom fish as yet on IT. But Laurence, this year metals have been shining fairly bright, whether it's the global metal prices and the commodity prices or the stock prices back home. Within the metals basket, is there any specific name that you would want to highlight?
Well, I'll stick to the underlying commodities, but just sort of highlighting, in the base metals in particular, both the copper and aluminium breakout, momentum's confirmed the highs for those metals. So we do think that there's further gains and big breakouts from consolidation patterns there. And on the gold side, we're still looking at 2,500 to 2,550 as the upside target from the trading range you broke out earlier this year, which was basically in place since the August 2020 highs. So those three metals really sort of stand out with momentum and further gains.
That, Laurence, the one segment which has done really well in the Indian markets and continues to do so is the larger PSU pack, and I'm talking ex-banks here. And within that, of course, there are a lot of individual cases, defense, manufacturing, a lot of these allied energy themes, etc. Any charts that look interesting there to you?
Well, I'd go back to that PSU bank comment that I made earlier on, and if we have to extend that to the broader market, definitely the public sector side, the PSU side, does show significant re-rating that started from 2020, and we think we only sort of halfway or 1/3 of the way through that re-rating process. So definitely PSU banks as well as the broader PSU companies, I think, are key leadership going forward within the India market.
Okay. And where within Nifty do you now then find leadership and, the laggards? You've already talked about individual cases within private banks and, of course, IT that you believe is going to weigh down heavy. But what about the leadership, stocks within Nifty?
Yeah, look, so again, sticking to the sectors here, most recent rollover and a sector to avoid is the pharmaceutical side. That had been a great outperformer over the past 12 months, but that's clearly rolled over, broken down both in absolute and relative terms. So I think pharma is one that joins the IT sector in a de-rating process and one to avoid. And then, like I said earlier on, I think some patience on the bank side to slowly accumulate in that space, because that would lead the breakouts and the more sustained breakout that we see at the Nifty level, towards the end of this quarter and into the third quarter, rather than being imminent breakouts in the next week or so.
All right, Laurence, really appreciate your time and so glad you could join us.
Yep.